Hi everyone, welcome to the Timing Research Show for August 1st, 2016. Today we will be talking about the 149th weekly report from Timing Research. If you have a chance to take a look at this yet, just go to TimingResearch.com/reports and you can download this or any past report there. My name is David Kosmeter. I'm the creator of Timing Research, and today I have Hanna hosting, so I'm going to go ahead and turn it over to him.
Hi, David. Thanks. Thanks for having me back again. We got an interesting group today. Although I haven't talked to all of these guys before. I know I've talked to Sam at least, Trading Gods. But in looking at your sites a little bit, it looks like we'll have some interesting back and forth, hopefully. I don't think Jason's joined us yet. Hopefully he can join us in a little while. But why don't I start off? I'll just go through. Maybe I'll introduce myself first, and then we'll just go down the list. For those of you that aren't familiar with my work, I'm Hanna. I've run a site called Quantifiable Edges for a pretty long time now. I started in 2008. It's a website, and it's got a newsletter that goes with it, and some other things up there. And it's quant-based research. Looks at historical probabilities. I also, in about 2 years ago, got involved with InvestiQuant. Actually, my Overnight Edges site merged with Scott Andrews' Master the Gap site, and we became InvestiQuant. And InvestiQuant also is quantitative-based research. It's swing trading, but also intraday trading and overnight trading as well. And a lot of it comes in table formats, and there's also some automated systems available there. So that's a little bit about me. You can find a lot of my writing at Quantifiable Edges or at InvestiQuant.com. Now let's introduce a few of the guys we have here already. I'm going to go in top to bottom on how I wrote it down, which I think is how David wrote it down. So. Sam, I hope you're not insulted. You're going to be last.
No worries. I came on last, so.
Oh, all right. So, Alan, is it Knuckman?
That's correct.
Okay. All right. I can't read my own writing here. Bullseye
option.
Okay, I thought I wrote option. All right, bullseyeoption.com. So, Alan, tell us about yourself a little bit and your service, and love to learn about you.
All right. Bullseye Option is a option service more so for stock traders. I'm not trying to be the smart guy, but I'm going to take advantage of the attributes of options using probability and controlling time to put the odds on my side. And really, I would like to describe my style as more lifestyle trades. I'm no longer an active trader. My lifestyle has changed. I've got a young daughter. I would like to take her to camp, take her to school, take her to softball, take her to dance, and all the other activities she does, pick her up. So I don't want to sit in front of a screen anymore. And I use the options markets with our service to position in high probability trades to take advantage of the larger overall moves, but not have to watch the minute-by-minute action in the markets. So that's what I focus on, and use options from a probability standpoint, not trying to outsmart the Morgan Stanley guys or the unusual activity options guys like James or the Goldman Sachs guys. I'm just using options as a vehicle because they offer so many advantages and they have built-in risk control if you're an options buyer.
Okay. Yeah, and I definitely hear what you're saying about not sitting in front of the screen the entire day. I started off my career sitting in front of the screen all day, and it was exciting for a period of time, but then, you know.
Right, it's more romanticized, I think. You know, now that we've stepped away from it, it wasn't as much fun as it seemed, and that requires obviously the most discipline. And most people don't have the time, energy, skill, or the account size to do that successfully. So, what I do with Bullseye Option is I try and come up with strategies and ways to attack the market that anyone can take advantage of. That they're not as time sensitive, they're not as they're not as sensitive with your management, and you can take advantage of whatever the markets are doing, but look big picture for weeks and months, maybe even longer than that.
Oh wow, so some of these are real long-term options.
You got a lot of January 2017. Looking at some January 2018 options to make some people's heads explode. But you using the option as a vehicle to take the time completely out of the equation, because that's where people get themselves in trouble, is they buy too little time, or they get these low probability lottery tickets, and that's where people unfortunately learn their lessons in that business. But there are ways to take advantage of what the options markets have to offer, and that's what we look to do.
Okay, interesting. Let's move on now to, we don't have Jason here yet, it looks like, so let's go on to James of AlphaShark.com. James Ramelli. I hope I'm pronouncing that right, James?
Oh, yeah.
Okay. Can you tell us a little bit about yourself and about AlphaShark?
Sure. So I am a trader here at AlphaShark Trading. We cover a variety of markets, but our main focus is definitely equity options. And as Alan kind of mentioned there, what we spend most of our day doing, I am in front of the screen all day, what we spend most of our day doing is looking at the equity options market for unusual and suspicious order flow in big blocks. So what I'm really concerned about on a day-to-day basis is where the big institutional money is buying and selling options, because that gives me a window into where the biggest traders in the world, meaning the ones that are swinging with the most capital, are expecting the market to move on any given day. And what we look for is long and short setups via big blocks of calls and big blocks of puts. And what's really great about watching the tape and following unusual options activity is if I want to be a day trader who is in front of the screen all day flipping in and out of contracts for 10, 20 cents at a time, I can do that because hedge funds do that type of trading activity. If I want to be more like Alan and set up trades that are out to January of 2017 or further out, I can do that too because hedge funds also trade options with that type of time frame. So no matter what type of trader you are, day trader, medium-term swing trader, longer-term swing trader, hedge funds do all of that too. They're engaged in all of those businesses. So you're going to see activity that gives me information about what they think is going to happen. For example, as I was sitting here and as we were starting out the show, a trader came in and bought a huge block of short-dated puts in triple D, 3D systems, and they've already been good for a 10-cent pop here with short-dated activity. At the same time, we've seen some activity today in Delta that goes all the way out through the end of September. So I can really tailor this to a trading plan that makes the most sense for me, and depending on how much time I want to spend in front of the screen as well. I have no children that I know of, so I can be here. I can be here all day and take dated options. But this isn't a system or strategy that only works for those people that want to be in front of the screen. The hedge funds trade it all, so there's information to be gleaned about anything.
Okay. All right. Interesting. So we got a few guys that do options, and we also got Sam at TradingGods.net. So we got a few animals here. It looks like we got Bullseye. If Jason is able to join us, he's a lion. We got a shark, and Sam is a god.
Apparently, I am. Yeah. So yeah, thanks for the introduction. TradingGods.net. We're essentially a service oriented toward the VIX Volatility Index, looking at the volatility markets. Our goal is to kind of help fill the void or fill the gap in the market around volatility. As you know, volatility as an asset is growing in importance, and it's our goal is to kind of impart that knowledge on new and existing traders, whether it's through VIX options, VIX ETNs, or futures. So a lot of the work that I'm doing at Trading Gods is obviously developing online articles and resources, as well as weekly webinar series that really just introduces new and experienced traders to how to access volatility as an asset and what that means for the broader U.S. stock market. So TradingGods.net is dedicated mostly toward the VIX and everything volatility related.
Okay, and now is a real interesting time with the VIX because the futures are so strongly in contango. I can't remember seeing them this strong this early in an expiration cycle in a long time. Are you finding it a real strong environment for XIV trading or XX?
Absolutely. The XIV is one of the most well performing at the current moment. And for me, I mean, I've been getting into volatility for a few years now. I've never seen it this low. I mean, the VIX closed at around 11.7, I think, of last week or the week before that. So it's never been this low, and the contango, as you mentioned, has never been this strong that I've experienced. So volatility right now is at the lowest that I've ever seen it. I mean, that makes sense given the recent performance of the S&P 500.
Right. Yeah, we've been chopping sideways for a few weeks here. Or not only chopping, just kind of drifting, I guess, right?
Yeah.
All right, well, so that's the panel. All smart guys. Maybe even me. And now we'll get into some predictions. What I want to do, if it's all right, is just kind of get your take on from today's open, which was basically the same as Friday's close, to this Friday's close. Are you predicting higher or lower? And then if you want to place a percentage on that prediction, that'd be great. Let's not get into reasons just yet. Let's map out, who's on what side, so we can maybe have a little bit of a debate about it, and in addition to giving our reasons for why we're bullish or bearish. So maybe, if it's all right, I'll go in reverse order, and we'll go Sam, James, Alan, and then me, to give just a raw number and I'm sorry, a bullish or bearish and a raw number, and then we'll come back to you for to fill in the details. So Sam, what are you thinking?
Okay, so I mean, I just changed my opinion on this over the weekend, actually, but I do believe the S&P 500 will be headed lower this week. My prediction for that is around 60%, and we'll get to the reasons a little bit later, as you mentioned.
Okay. James, where are you with it?
Yeah, so I would actually also agree with Sam there. I think that we're going to head lower this week with a confidence of about 60%, given the range that the market has been caught in for what seems like forever. Now, I really can't be a whole lot more confident than that, but gun to head, I'd be looking to get short this week.
Okay. And Alan, what about you?
Well, not short from here because we've already pulled back a little bit. We've been in this sideways range for, like you said, 2 weeks. It seems like an awfully long time, but it really hasn't been. I'm optimistic. I remain bullish, and I'm the only one on this side of the coin, right? So I can just bid $1 and I win.
I haven't joined yet.
Okay. All right.
So, what would you say your confidence level is? Real high or?
Yeah, it's 75% high.
Okay.
Last week we took a break. We were unchanged in the S&P.
Okay. All right. Well, this should be good because I'm going to join Alan. So it'll be 2v2 here, and that's how markets are made, right, guys? So maybe we can sell you some stock before we're done here. I'm going to say higher with a 57.2% probability, which sounds random, but I'll get into it later. So let's go back now and kind of revisit. Now we know where each other are, and we can talk about some of the reasons, and then maybe we'll debate it a little bit if there seem to be things that we're completely polar on. So Sam, you want to talk about some of the things you're looking at in the market and why you think it's going to be heading lower this week?
Sure. So for me, one of the things that I'm tracking rather carefully these days is the oil prices. And what we saw was oil prices below $40 a barrel. Typically, the U.S. stock market is much more sensitive to swings in the price once it gets below that level or around that level. And right now, oil prices have declined, over 15% in July. And I think we're at a point now where the oil price is going to contribute to a pullback in the market. I'm not expecting it to be too severe. For some reason, U.S. stocks keep trending upward, and the VIX demonstrates that rather succinctly that we are in a bull period, at least for over the short term. But over this past week, I think, over the next 5 days, I should say, I think that with oil prices being just so bad, that's going to invariably impact the U.S. stock market in some capacity.
Okay. Interesting. I wasn't ready for you to say oil, just being most of what you do is with the VIX. But yeah, do you guys trade like the oil VIX there as well, and the gold VIX and those things?
We don't. We're mostly in the VIX, the ETNs, as well as in the options on the VXX, XIV, and so on.
Okay. All right. Interesting. James, you looking at oil too, or are you looking at something else?
No, not so.
Many things.
Yeah, not so much. So, I mean, the reason that I think the market is going lower this week, for one, I should probably say I don't think we're going to be lower by very much, right? So, if I could update my answer, I would say lower to unchanged on the week. And one of the big reasons for that is that the S&P futures, the SPOOs right now, the options on those for this week are only implying about a 19-point move up or down through Friday. When we consider the fact that we're kind of in the middle of earnings season here and we have a jobs number this week, that's really not that much action being priced into markets.
Yeah.
So, yeah, that would tell me that market makers are kind of expecting another snoozer this week. And just given the fact that we made a new high today and then reversed pretty darn quickly off that high, I think that the tendency will be for the market to kind of drift lower into the end of the week. Don't think we're going to be down, 60, 70 points this week. Probably going to be a pretty quiet one. But another reason for that, too, is that a lot of the stocks that reported earnings last week that made new highs or broke out of the ranges that they were in gave back a lot of those gains. It didn't seem like many stocks that got bid on earnings last week were able to hold those gains very well. A lot of the names that I was involved in, I kind of found myself in that situation. Facebook is a good example. Amazon came off of its highs. So with all those things being said, I think we're going to end up lower this week, but not by too much. I wouldn't be running out right now to buy all the at-the-money SPY puts I can, because I think that even with the VIX this low, they're still not, the premium is probably still being a little bit overpriced.
Okay. All right, interesting. So we got a few reasons why the market can head lower between Sam and James. Now, Alan, it's up to you and I to tell everybody why they're wrong, I guess.
Well,
I'll start with you.
I'm just not trying to be that guy that picks the top of the market. That's been very expensive, and there have been a lot of casualties over the last 6 or 7 years. So the path of least resistance is up. The market took a breather last week. If you look at the S&P, the NASDAQ finally took out their December highs. So the big three horses, the Dow, the NASDAQ, and the S&P, all made all-time highs in the month of July. So the momentum's there. Had a little bit of a pause. If you look at it technically, the S&P is trading, sideways in a 15-point range. A breakout above 2175, or so on a closing basis. That targets what, 2090, and I'm sorry, 2190. 2200 is the target, the initial target from that breakout that we had in July, where the market had been trading for more than almost a year between 2040 and 2120. So there's still some upside objectives, and I think the catalyst, Sam was right, that the catalyst can be oil, but I'm looking for that to be a bullish catalyst. I think most of the damage has been done. The risk reward, Friday we made new lows and closed higher. Today we gave that back again, but let's see how things go. The dollar is the key driver, and the dollar's turned over. So with the dollar not going up anymore, that could provide relief for oil, therefore oil stocks. Let's remember, we just made new all-time highs, and oil is significantly off. It's about at the middle of its range for 2016. So if that sector can stabilize, then we've got some nice upside potential pop there.
Okay. All right. Interesting. Well, so I do a lot of studies with quantifiable edges, and we run a lot of systems at InvestaQuant, and I've got a little bit of flavor of each of them here that I'm looking at, and most of what I'm seeing is pointing higher. For instance, I ran a study at the end of the week last week that looked at other instances where the S&P 500 made a 50-day high, and then traded with I'm sorry, I think it was the spider, not the cash index, that made a 50-day high, and then closed within the range of that 50-day high bar for 5 days in a row, and it did that last week, actually a couple times. And what I found is when you look out over the next 2 weeks, 2 weeks later, around 75% of the time, it's been higher, and significantly so. So that suggests to me that the breakout often happens in the direction of the trend. It's kind of an old adage that you hear, and in a case like this, it seems to be true. Not all of the old adages are true, but this one, in this context, seems to hold over time. So that would favor that the next, or the move over the next few weeks is going to be up. Now for this week, at InvestiQuant we look at things a few different ways, but we have 1, 3, and 5 day systems, and I break them out into acceleration systems, seasonality, and momentum systems. And so the 5 day combination, looking out 5 days for acceleration, momentum, and seasonality, is looking pretty strong. Under similar circumstances in the past, the market was higher 57.2% of the time based on the algorithms. That's where I came up with that little number there earlier. And it would have a profit factor of 1.37 or something. So that means, 37% more gains than losses over time is a simple way to think about that. So there seems to be an upside edge. It's not overwhelming, but to me, if I had to bet, I'd be betting long, and I do have some bets on the long side right now. So I guess I don't have to bet, but I do. It's part of my job. I'm a trader, right? One thing that I found interesting last week, and maybe I'll ask you guys about it, is we closed the week with the S&P right near new highs. The Russell was at 2016 highs. The NASDAQ 100 was at new all-time highs, and the Dow closed down every day last week. It was it closed lower all 5 days, and it was at like a 10-day low. Is the divergence there concerning to anyone?
Well, I'll step up. When it comes to the Dow, we've seen a series of lower highs and lower lows over the last few sessions, and it's been a while since those highs were made. I think it was the 20th of July. So, yeah, it's taken a pause. Now, let's remember though that the Dow had led for most of 2016 out of those big three. So, maybe you're just seeing a little bit of rotation out of some of the safety Dow stocks and going after the big boys. That's what we had last week: Apple, Facebook, Amazon. Some of the big movers, the big boys were moving. So maybe that was just money, rotating out. But you can look at the Dow and 19,200, and then you're looking at 20,000. 19,200 would be 10% plus for the year if we got there by year end.
Yeah. Go ahead.
Yeah, I would actually agree with Alan there as well. I think that explains most of the divergence. When those names report, Facebook, Google, Apple, Amazon, all those names had relatively solid quarters. You tend to see money start to chase those once that comes out. And I think that, maybe this week we'll see that start to slow down a little bit. Some of those stocks didn't manage to hold on to those gains quite as well. Mm-hmm. So, it might not be a situation where we can see them continue to run up another 5% over the next 2 weeks. And things might start to settle down from there. But I would agree with Alan that a lot of that divergence can probably be explained by sector rotation.
Yeah. I would agree with you guys too. I didn't think it was anything terribly substantial, but I did find it interesting that with all these other things hitting new highs, Dow was pulling back every day. Not by a lot, but it happened every day. So it seemed interesting to me. Let's go through and talk a little bit about what are you looking at this upcoming week as far as things that could impact the market. Are there particular indicators you're focused on for this week? Are there news reports that you're expecting, such as the jobs report, which I think James already mentioned? That you think are going to have a big impact on the market. Alan, do you want to start with that?
Sure. I'm paying attention to some stocks that still haven't participated in the rally. It's about risk reward. If you're looking at individual sectors or stocks, It's a lot better to look for those to play catch up and to chase the leaders. I'm still looking for BABA. BABA hasn't had a breakout like a lot of these big name tech stocks just yet, and we're approaching that $85 level. The high for the year is around 86, but let's remember where this stock was. 90 is kind of the near-term target, and then it could really get rolling. I think people forget the space that BABA is in and the potential it has there. Amazon's gone up exponentially, and BABA's kind of been left behind. It's in the same space, but it's got the China overhang. But the way I look at it, doing commerce in China, I think there's a lot of customers and there's a lot of potential. So that's something I'm looking to see if it can play a little bit of catch up. But I'm also focusing on the VIX because the VIX is very interesting in the fact that I'm probably a lot older than everybody here. You got to remember 2007, the VIX was down below 10. So just because it's low doesn't mean it can't go lower. And if you look at the VIX, it's been trading between 20 and 12 really for the last 5 years. So it traded below 12 3 times so far in the last 52 weeks, and Friday was one of those days. Now it's bounced back a little bit, but there could still be some more downside. The VIX hasn't made new annual highs, even though the stock market has. So there's still more potential for the VIX to go lower, and therefore the stock market to go higher. So I'm keying on that VIX right now as hopefully a little bit of a confirmation that we still have some more bull juice left in this tank.
Okay, you mean the VIX hasn't made new annual lows, even
right?
With the stock market. Okay, all
right. That's what I was saying. Because the low is 1088, and I think what we get to, last week 1140 or something. So we didn't even get close, even though the stock market made new highs.
Yeah, and the range was about as tight as you'll ever see.
Right.
Yeah. Okay, interesting. James, what are you looking at for this upcoming week?
So our strategy revolves around reading the tape. So I spend all my time sitting here waiting for a big institutional trader to pull the trigger on something, and then I do an analysis and say, okay, do I want to participate in this trade with that trader? One of the things that every day we shoot a video for our website for the most interesting order that hit the tape so far during the day, and as of 11 o'clock this morning, I did a video that was entitled "Sometimes the Best Trade is No Trade," because there hasn't been any significant activity today. We use a piece of software that we designed called Option Hacker to kind of parse through all the order flow and pick out the most unusual trades using an algorithm we designed. And out of all the signals that have hit today, and for one, it's a thin number of signals. There's been 7 so far today. Normally, I would expect to see like 25 throughout the course of the day. Out of all those signals, the longest dated expiry was for September 9th weekly options, which is still like less than 40 days away. So what that would tell me is that institutional money right now isn't really ready to take kind of a longer term stance on the stock market, and that all of the options plays are really short dated. So what I'm looking for this week are probably opportunities to be really quick with my trades and look for more types of intraday setups. When the market is in a range like this, and then I also see that big money and institutional money isn't really ready to make a longer term prediction or put their money where their mouth is and take a stance a little bit further down the road on the general direction of the broader market, I usually switch up to day trading. This past Friday, on the heels of all this sideways action, I cleared out most of my book, and I really only have 1 or 2 positions on right now, the rest in cash. So I'm in full day trade mode. I'm looking for good setups and examples like that triple D trade that I highlighted a little bit earlier for quick intraday types of swings.
Yeah, you make some good points. I mean, you got to take what the market gives you, right? That's something that I think a lot of beginning traders struggle with. You say, well, if you're a trader, you should be trading, right? People feel like that a lot of the time, and really, you just got to be ready for when the edges appear.
Right, exactly, and for the way that we go about this, the institutional money will let me know when they think a move is going to happen. Right. And when you start to see the monies go into longer dated options, then it kind of shows us that, all right, big money is out there and ready to kind of take a stance on the broader market right now with more than just a couple of weeks worth of a holding period in mind. And to Alan's point about the VIX, I also don't want to be buying those longer dated options just yet if I'm expecting further lows in the VIX and for more premium to come out of this market. People say all the time, if vol looks cheap, it's probably going to get cheaper. And it creates kind of a difficult situation because the best way to trade a trading range bound type of market is to use setups like iron condors and iron butterflies and get short premium playing inside of a range. But that becomes a lot less attractive when there isn't a whole lot of premium to sell. But at the same time, you don't necessarily want to be completely long premium as well because this trading range just kills vol. So I think that's a bunch of signals pointing me towards, hey, let's kind of step back and maybe look for day trade setups, do a little bit of scalping until one, the market finds some broader direction, and then institutional money comes in and starts making some bets as well.
Yeah, and there's as traders, there's plenty of constructive things you can do other than just hit buys and sell buttons, right?
Exactly.
And so your point about the VIX leads me to Sam, who the question here, Sam, is what are you going to be looking at this week? And I think the VIX is super interesting. Everybody seems to be talking about it right now because of the fact that it's so low, and that would seem to make life boring for a volatility trader, right? Because you don't have volatility, but at the same time, with contango so high, you've got some substantial edges in some of the ETNs, correct? And
Yeah, that's true. I mean, for me, what I'm looking for and what I've been trying to do over the past few months is really trying to analyze, why stock markets are so high. I mean, we're in the middle of a fifth consecutive quarter of earnings decline, and based on the latest FactSet data, about 60% of S&P companies have reported, and our blended earnings decline is around 4%. So I'm going to be monitoring the earnings reports, and just given the overall fundamental picture of the market, I've just been having a hard time really seeing where these all-time highs keep coming from. So maybe I have to go back to the drawing board and then kind of look at that again. So obviously the earnings data is something that I'm going to be looking at very carefully this week. Also, I mean, my past life as a labor economist, I'm very interested in the non-farm payrolls report. That I think is going to, it's arguably the most closely followed report of the month. So a pop over 200,000, I think, is going to have a significant impact on the market. Right now, I think they're predicting around 175,000. So that's really another area that I'm going to be looking at. And also, I think Alan earlier mentioned the U.S. dollar. So I am looking at the U.S. dollar and also the Fed fund futures rates because that implies what traders are expecting in terms of monetary policy. So I'm just trying to develop a holistic picture of the market and try to justify these high stock prices that we've been seeing over the past few weeks.
Okay. And with volatility so low, it seems like the time of year where, as James and Alan were saying, you could see it get even lower, right? You got the dog days of August where a lot of traders are on vacation. The market often moves slow. At the same time, you question, why are we hitting these new highs? And if the proverbial poop hits the fan here, it's also the time of year where, because trading is thin, you could see a real outsized move like we saw last August, right? So I don't know. Are you optimistic that we can stay low volatility, or are you concerned that we'll see something hit the fan again?
For me, again, my background in economics, looking at the market, I don't really see volatility staying low for the foreseeable future. What that outlook is exactly, I can't say. I'm not going to procrastinate exactly where we're going to end up. But for me, you look at low growth, you look at the fact that our recoveries are being fueled by central bank policies, and you saw what happened in Japan on Friday, where the BOJ didn't give us what we wanted, and there was a lot of volatility around that. So, for me, just trying to put the whole picture together, I don't really see much avenues for further growth over the long term. I think the global market is too volatile right now. And we wait until the Brexit negotiations begin. That could be an entirely new story unfolding there.
Yeah, that sure made June exciting.
Put mildly, right?
Yeah, I wonder what would have happened if the Brexit vote didn't happen, right? it was such a hard and fast sell-off that was forgotten about 2 days later and moved us to new highs very quickly. Where would we be if that didn't happen? It would kind of flushed out the weak hands and allowed the market to rally. It seems like. Would the market be higher or as high now if we didn't get that flush out? I don't know.
Who knows?
All right. All things to ponder, but not sure that matters a whole lot. What may matter to people as traders is question number 4 we had on the survey today, which I saw a good number of interesting answers to, but none of them as interesting as I'm sure the ones you guys will give. And let me read it directly rather than try and read my scribble notes here. And it's what methods or techniques do you use to overcome the emotional aspects of trading? And I'll go in reverse order again, and Sam, you can go since you were already talking and on a roll.
Yeah, well, my answer might not be as exciting as our fellow panelists, but for me, I mean, I've always been a researcher, and my goal has always been to develop a holistic picture of the market. So I routinely do a lot of market research and try to prepare for everything that there is to prepare for. So for me, monitoring the economic calendar, making sure I have a trading strategy and following through with it, and really limiting the number of trades that I make on a given day or a given week is just really what's worked for me over the past for the long haul. So for me, I mean, I would just always, what we do on Trading Gods is, try to help our traders really just try to establish a whole picture of the market, a holistic picture, and to be proactive and to do as much research as you can before you enter any position. I think that's really one of the best ways to ensure that emotions remain at bay throughout the course of your trading career. I know that's not always possible, but that's kind of the approach that I've always taken.
You're stealing my answer a little bit there too. I'm gonna talk about research as well. So I totally get what you're saying there. James, what about you? What keeps you from getting over emotional?
But I have a really methodical and systematic trading plan, so it pretty much takes emotions out of the game. There's at no point any kind of question mark on how I should handle a trade from a risk management standpoint or a profit-taking standpoint, and based on the fact that 98% of my trade setups are guided by unusual options activity, I don't really get all that emotional about trading. Some days there are no setups where big money just isn't really trading very many options. It's very sideways and choppy, and those days are boring. And I would say the most difficult emotion to deal with for me with trading is boredom, because it can be really tempting to kind of bend the rules of the trading plan to bring in a setup that might not exactly fit the restrictions that you put out for yourself when a day or two or sometimes more than that have gone by without a trade that does fit into your universe of setups and selection criteria. So it's just kind of being able to sit on your hands when there are no setups. And then when we do have trades that look interesting, being able to go ahead and enter those. I use the same 7-point evaluation plan for every unusual option activity order that hits the tape that looks interesting to me. And if it doesn't fit into those criteria, I rule it out as being more likely to be a hedge or closing activity or something like that, and then I can just move on. Once I'm in the trade, I have very strict rules about managing the profits and how much I'm willing to lose in the position. And if it goes one way and I take profits, I'm happy about it. If it goes the other way, I'm stopped out. But there's really not a whole lot of room in a plan like that for me to say, okay, well, here we are at my stop loss level. I'm gonna double my position size rather than get out of it. If you have rules like that and you stick to them, there really isn't much room for emotional decision making. So that's kind of how I deal with all of that.
Yeah, I think you bring up some really good points too. You talk about managing boredom, and
That's a big one. Most people, I think, struggle with that one more so than they struggle with risk management or taking profits. A lot of traders think about risk management as, hey, this is how much money I can lose in the trade. Here's how much money I can make. They don't think about, okay, if a trade goes in my favor, I actually increase my overall risk exposure in that if I buy an option for $1 and it goes to $2, I now have twice as much risk in it. But once you get past that, I think people really, really struggle with what to do when there aren't any setups and the market is boring and not presenting them with a whole lot. I think a lot of people, even professionals, slip into a mode where it's really easy for them to take a trade that they wouldn't normally on a busy day.
Yeah, and I've heard people describe trading as hours of boredom followed by moments of panic, and that's kind of what it's like sometimes, right? Or it goes from 0 to 60 in no time. And I think managing that boredom, as you said, is extremely important, because when you're looking to, when traders say, all right, well, maybe I'll take this trade that doesn't quite meet my criteria, really what you're doing there is you're taking a marginal at best setup in a market that's really not favorable for your techniques. So how much you hoping to gain doing that? Like, you gotta wait it out. And if you can't wait it out sitting in front of the screen, go do something else. I don't know. That's I get what you're saying. I totally agree with you there. So let's move on to Alan. Oh, Alan, you there?
Yes, I'm here. I got you.
Okay, good. I wasn't sure if I dropped there. I had a glitch for a minute. So how do you deal with the emotional side of trading?
Well, I agree with everything said so far, that patience is your greatest asset, and I think it's underappreciated. It doesn't cost you anything to let a trade go. And if you miss it, you miss it. So what? I come from old school where you had to take advantage of the opportunities when they came, because they weren't as frequent. You couldn't just trade any market, any direction, any time. Before electronic trading, you're in a pit. You could only handle what's in that pit. If it wasn't happening, what do you do? So my tired story that I love to tell is that I dabbled in treasury bonds, and if it wasn't happening, I live here in Chicago. I would have to Wrigley Field. I had an apartment that overlooked the ballpark, and I like baseball. Who doesn't? And my girlfriend at the time, who became my wife, would call in the afternoons, and she'd ask me why I'm at Wrigley Field, and I would tell her I'm saving money by not being in the pit, by not trading. So it was actually, I still to this day believe that I'm telling the truth when I tell that story. So you can't force trades, and really when it comes down to it, trading is just math. It's all just probability and math. That's all it is. And you can control your probability with option strategies. That's what we do at Bullseye. And then it's all about allocation and risk control. For me and for what I like to do, I like to maximize the time component. If I'm directional, I'm going to buy more time than I need. I'm going to buy enough time to be right. I'm going to use the right option, the right strike, the right month to give me the best probability, but give me enough time. In low volatility situations, that's ideal. That's why I'm talking about 2017, 2018. Just because for an extra $30 or $50, why not buy an extra 6 months of time? You have it just in case something crazy, stupid happens. The next crisis du jour. But let's talk about that for a second. Over the last 3 years, last 2 years, we've had 3 major sell-offs, and they've all bounced back. And you have to respect that. The market's going to come back every time until it doesn't. But right now,
Right.
there aren't that many choices as far as global markets and in that chase for yield. So to get back to the time component, and if there are sell-offs and the volatility does spike, I like to use the word Vixplosion. You've seen every time there's been this Vixplosion, it's been temporary, and it gets beaten right back down underneath 20 after a couple of 3, 4, 5 sessions. So I use that as a time to sell cash-secured puts to get into stocks that I want to own at a lower price or get paid not to. So it's all about probability. I don't take any trades at my age anymore that don't have a 70% probability or greater. It's just not worth it for me anymore.
All right, that sounds great, and I love that story about going to Wrigley in the Cubs games, and I think fortunately for you back then probably is that the games were over by the time I mean, the market was closed by the time the games were over, right? That way you could not go to Wrigley and then go back to the office and do any beer muscle trading, right? Getting brave with the.
Exactly. Plus, tickets were ridiculously cheap. I had somebody that worked at the ticket window, so I had a lot of things working for me at the time. Those were good days, but the Cubs were a terrible, terrible, terrible team. So everything's a trade-off. I had plenty of time and cheap tickets, but it was bad baseball.
Yeah, but there's something to be said about rooting for a bad team. You like cheap tickets and readily available, right? You don't have to.
No fighting. But that's a lesson we learned. A lot of people don't appreciate, because everything now is on a screen. You can trade anything, anytime, and it's so easy to get in the markets. You've really got to understand how important it is to only trade the best setups. And if you miss it, so what? It doesn't cost you anything to miss a trade.
Yeah, focus is a tough thing too with a lot of people, especially these days. All the information we're fed, I feel like the whole world is turning into the dogs from Up. If you ever saw the Up movie, every time they'd be talking, and all of a sudden they'd look and go, "Squirrel, squirrel, squirrel." That's a squirrel. So that's kind of like the society is becoming, I think.
And I think one thing to finish up, the one thing that I do recommend when you get these times of volatility and these times of fear, turn the TV off. You can see James' screenshot. We do some financial analysis on air, but most of the stuff on there, you got to understand, they're not there to help you make money. They're there to sell advertising, and to do that, they've got to get you emotional and wound up and worried about the next event, the next issue. So a lot of times that is it's more hurtful than helpful watching the financial channels.
Oh yeah. If you look at charts from the last several years, as traders that are in it every day, we can probably point to most of the charts, the big sell-offs, and remember why they were. But if you're not in it every day, if I pointed to last August, I'll bet most people would be like, hey, I don't remember why the market did that. Was there a reason? What was it? Right? It was all over the news.
Right. Remember one time we had like a 5% sell-off because of Cyprus, or wasn't it Cyprus?
Yeah.
Some island, okay, that had the GDP of, I don't know, Indiana.
Right.
And that was going to bring the financial markets to a halt.
Right.
It's sometimes it's unreasonable.
Yep. All right. Well, I'm. My answer to how I keep unemotional is very similar to what everyone else has been saying here, in the fact that first of all, I find research to be very cathartic for me. So not just prepping to enter positions, but really I look at things with a kind of a fresh palette every night. So if I'm in a trade, and let's use index trades as an example because it's the simplest one. If I get into the S&P 500 or whatever it is, I get into it for a reason. And my job as a trader, I believe, is if I have an edge, a substantial edge, get in. And when that edge is no longer there, get out. And it doesn't really matter whether my position is plus or minus at that point. Whether I'm making money or losing money has no impact on whether the market's going to continue to move higher or lower or reverse direction from there. So I just try and take a fresh look every night. And if I'm getting beat up in a position and I take a fresh look, then I've always found that to be confirming either, yep, okay, it's going against me now, but it looks like there's a strong edge and I need to stay in it. Or the reasons that I thought it was going to bounce no longer hold, and we got some new reasons why it's going to go lower, and just get out. So research has been, for me, the thing that's kept me grounded, and stepping back each night and taking a fresh look. Most of my trading is swing trading. So I'm able to step back from it each night and look at my positions and look at what new positions I might want to take on. And like you guys say, a lot of times there's boredom there. So In a market like this where it's chopping sideways, I don't have a whole lot of swing trading positions on. I'm just waiting for the next move to occur and for some strong edges to emerge from that move, and then I'll start taking on new positions, whether they be long or short. So that's where I am with that, and I appreciate all your answers. I think this was a great talk from everybody, really. Why don't I just go through one last time, and if you have anything else you want to add, or tell us about your sites or service, or if you have anything going on that we should be aware about, let me know, and I'll go in top to bottom this time. I'll reverse the order back. So Alan, if you want to go first.
All right, here we go. Back on board. You want me to finish up with comments about what we got, or you want to talk about our services and what we have to offer?
Yeah, anything you want to add about yourself, your service,
okay.
Or if there's anything you wanted to say about the market that you haven't gotten a chance to yet, that I cut you off, or
I do love James's service, to be honest with you. I've been infatuated with unusual option activity. I think it's so neat to be able to look at the transparency, because you don't see all the trades in stocks. In options, you do. Every trade hits the tape. So you're trying to do financial forensics and trying to figure out why somebody's doing what they're doing. And why I find it so interesting is because when somebody knows something, well, how should we say it politely? When someone has a strong opinion, and they think they know what's going to happen, what are they going to do?
Like Martha Stewart?
Well, she was not smart. They'll use options, because that's what smart money does. They'll use options. All right. So I try and, I love watching the unusual option activity. But like I said, my lifestyle's changed, and my service is more designed for people that work during the day, or that's my friend is a pilot for Southwest. He's a typical customer type that I'm looking for, demographic. He's successful, smart, but he has enough options knowledge just to hurt himself. And he looks at things, and he reads the news, and he reacts, and he overreacts, and he doesn't trade properly. He doesn't use proper allocation. So he's not using options properly. So that's what I'm trying to do with my Bullseye service, is use options properly, take advantage of probability, take advantage of the leverage, take advantage of the risk control, and use them as a vehicle. So, a lot of times I can't mention enough that looking at the markets, and we've all been doing this for a long time, a lot of times you should be a buyer when you're a seller, and you should be a seller when you're a buyer. That's just human nature, because by the time we get our tanks of knowledge filled to that level, where we have that level of confidence to do what we do, it's probably already occurred. So, I try and use options to elongate the time, give myself a larger window, and also prevent that decision-making process, because by human nature, my dad's a psychologist, so I'm licensed to talk about this. Human nature, we always do the wrong thing. When the market forces you to make a decision, we're always going to make the wrong decision. That's just how it works. I don't know how, I don't know why, but it just works that way. So my Bullseye service, I do a couple of trades a week, not terribly active, but we are 26 out of 30 for 2016 so far. They're all probability plays. It's something you don't have to watch on a day-by-day basis. You're just looking on a weekly basis, and it's all about math. So it's very, very spelled out why I picked that sector, why I picked that stock, why I picked that strike, why I picked that option. And what to risk. So it's all spelled out. It's just a way to attack the markets using options instead of stock, but be able to do it at arm's length distance, take advantage of probability, look big picture, and have optimism. I like to think that I am optimistic of opportunity, and it just happens to be that I've been, I'm also bullish in the longer term. I do work with a lot of angry men at the exchange that have been saying the end of the financial world's coming for the last 6 years. Now, they've been wrong, and even the guys that have been out, it's been expensive. So hey, go with what the markets give you. Don't fight it. There's still, just because the market's at a high level doesn't mean it can't go a lot higher. That's look what we've done year after year after year. So that's my rundown. Bullseyeoption.com. /TRY will get you a 1-month trial to my inner circle membership, and and hopefully I can make you turn that frown upside down, turn lemons into lemonade. No matter what the markets are doing, there's an option strategy to take advantage of it with high probability and fit into your lifestyle. So that's my story, but also try James's stuff because I love unusual option activity. If you feel like a detective, that's the place to go.
All right, great. Thank you, Alan. I think you got enough people excited there. Hopefully, some people will try out your stuff. In talking to you today, you certainly seem to know your stuff and like an interesting guy. And so, if options is your thing, you're listening out there, check out Bullseye Options. And James, you want to tell us a little bit about your site, other than that Alan likes it?
Yeah, sure. First of all, thank you very much for the reco there, Alan. I also highly recommend Alan's services as well. He offers just something that we don't really touch on too much, and that's the more passive type of trading style for someone who doesn't necessarily want to sit in front of the screen and watch the tape all day. With that being said, the ideal trader for us, someone that is really interested in unusual option activity, is someone who has interest in both sides of that coin, kind of sitting in front of the screen looking for day trade setups, but also is interested in what the unusual options activity tells us about the medium to longer term broader expectations for the market as well. I think there's a lot of value to be extracted for any trader who is looking at unusual options activity, even if they don't necessarily trade options. We talk about all the time about how these options trades can oftentimes set up well for stock. One thing that Alan did mention that I would like to touch on that I haven't really mentioned yet is that we do catch a whole lot of insider trading happening by watching the tape. I think that I could run the SEC 1,000 times better than it is now just by having a passive attention on the order flow during the day. You watch unusual options activity for 2 weeks and you will be shocked at just how often large blocks of options are bought ahead of some type of an announcement. Not just necessarily large M&A deals. There's almost always a big block of options that trades ahead of M&A, ahead of upgrades and downgrades, product announcements, any type of corporate actions. It's really, really kind of shocking just how often it happens, and that's one of the things that we're always on the lookout for as well, is that big home run winner when we have a big M&A deal. So far this year, Mondelez was a huge one. That merger, there was a ton of unusual option activity. And over the past 3 or 4 years, I've probably participated in about 4 different humongous buyouts that we were led into via unusual option activity. I don't always talk about that too much because I don't want people to think that that's what we're sitting here doing all day, buying options for 30 cents that go to $40 after there's a big buyout. Doesn't always work that way, but this is the type of order flow that you can use to get a good idea of where big money is pressing longs, pressing shorts on any given day. Because like Alan said, if you're looking at stock, you're missing out on half the picture. The rest of the iceberg is submerged. You can't see it. It's all taking place in dark pools. It's not the case for options. Anyone that wants to learn a little bit more about what we do is free to shoot me an email at james@alphashark.com. We have way too many offerings for me to get into them specifically now. We do have a live trading room that is probably the best place for someone to learn about order flow because we're just sitting there picking it apart all day long from the open to the close. So shoot me an email and I'll do my best to guide you through what our offerings entail and what's best for you based on your current situation. James@alphashark.com, or feel free to fill out the contact form on our website.
Okay, great. Thanks, James. Looks like we got a couple of good options for people that are interested in options here with James and Alan, Bullseye Options and Alpha Shark. And if trading volatility or VIX ETNs, options, or futures is your thing, Sam's probably your guy. So, Sam, you want to tell us a little bit more, or let us know anything that's going on there at Trading Gods right now?
Sure. So thanks for that introduction. So essentially, Trading Gods is a complete resource dedicated to training around the VIX volatility market and helping traders access volatility as an asset. So we currently have a program offering for the VIX trader. Our VIX trader is really your one-stop shop for understanding everything about volatility and trading volatility effectively. So we strongly recommend that anybody who's interested in trading volatility as an asset go to tradinggods.net/VIX trader and you get to learn more about our current program, essentially giving you a crash course on volatility as an asset.
Okay. All right. Great. Well, everybody, thanks for coming. Again, you can find me at quantifiableedges.com. I encourage you to check it out anytime for a free 1-week trial. And I've been doing that for a long time. And also check out investaquant.com, where we cover not only swing trading, but also intraday and overnight, and there's a lot of automated systems trading there as well. So whatever your time frame, anywhere from a few minutes to a few days, it's covered there at InvestaQuant. So check us out either of those places. I'm going to be doing a webinar next week, introducing or covering some of the stuff I cover at InvestaQuant in the what I call the Navigator newsletter. It's a nightly newsletter that I do. It looks at a lot of the data we have, and I publish trade ideas in there as well. So you can check out the webinar next week. There'll be information coming up on that at InvestaQuant, or you can look at information on the Navigator or any of the other services there as well. So David, thanks a bunch for having me again, and for putting together such a good panel. I look forward to doing this again in the future.
Yeah, thanks, guys. Great show. Just want to remind everyone watching that if you want to view any of the reports, or if you'd like to view any of the past web shows, including this one in a few minutes, that it will all be available on TimingResearch.com. Also, join us next week for the show. Barry Burns and Jason Pierce are going to be on for the first time, along with Andrew Keene and Jim Kenny. And just want to thank my guests again for this week. Alan Knuckman of BullseyeOption.com. It's your first time on the show, so thanks for being on. James Ramelli of AlphaShark.com. Sam Bourgi of TradingGods.net. And Rob Hanna of InvestaQuant.com. Thank you for hosting. And Jason Jankovsky was supposed to be on today, but he had some technical issues, so we'll have him on another show soon. So thanks, guys.
Thanks a lot, guys. Take care.
Thanks. Good night.